I would say in the short term, where fair value for Ethereum does not play into what ETH does short term. I mean, look at it. Last week it got to 3,300 on because there are folks who have liquidation levels, or they're doing pair trades, or people think Ethereum's a dead chain, so they're betting on another chain and trying to force levels of liquidation.
The price of Ethereum fluctuated last week, falling to $3,300 and now above $3,800, as traders approached liquidation levels and others placed bets that Ethereum may lose ground to other blockchains. This short-term shift is more related to market variables like forced selling and pair trades than it is to Ethereum's fundamental principles. Ethereum is still robust in spite of this, with analysts drawing comparisons between this stage and Bitcoin's 2017 breakthrough year, when it shot from $1,000 to much higher levels as Wall Street started to take attention. Analysts are discussing how Ethereum is currently experiencing its Bitcoin moment of 2017 and how institutional interest is quickly increasing. Since Ethereum previously peaked close to $4,000 in December, many people believe it will actually reach that level shortly. Ethereum's ongoing development, network enhancements, and growing on-chain activity, which indicate broader acceptance and confidence, all contribute to this increased seal. Ethereum's active user addresses and transactions have reached all highs in recent weeks, indicating a resurgence of the community and increased demand. The regulatory landscape is also shifting to favor smart contract platforms like Ethereum over Bitcoin due to Ethereum's capacity to handle stablecoins and decentralized finance applications. As Ethereum adjusts to new regulations while preserving network security and dependability, it is positioned as a key participant in digital finance and technological innovation. These ideas were recently highlighted by Tom Lee in an interview with a well-known crypto-focused video channel, supporting the notion that Ethereum's rise is only getting started and that Wall Street's increased engagement will probably drive up its price. Let's listen to Tom Lee now as he discusses his predictions for the future. For more in-depth material, don't forget to like, subscribe, and turn on notifications. I want to take a time to discuss something that has been really interesting to me lately before we get back into the video. Cortex Exchange. You're already lagging behind if you're trading cryptocurrency in 2025 without AI on your side. The markets are more manipulative, quicker, and more complicated than before. Human reaction time is simply insufficient these days. That's precisely the reason Cortex Trade caught my attention. This trading platform, which is totally automated and powered by AI, was created for the modern era of investment. We're talking about a system that tracks price activity, news, sentiment, and on-chain data, and then adjusts in real time using deep learning models like LSTMs, CNNs, XGBoost, and even hidden Markov models. This system operates around. This is not a bot that merely responds to indicators. It is a dynamic engine that trades more quickly than a human could on Binance, Kcoin, and Bybit. I've been testing it out, and what impressed me most wasn't just the automation, it's the control. Profits are sent directly to your wallet, and you can withdraw at any moment without any delays or lockups. It's okay if you're still dubious, but they also have a full demo mode. Just an opportunity to see what the platform can do. No financial commitment required. This is certainly worth looking into if you take your portfolio seriously in the current environment. Links are provided below. Look it over and let me know if you believe AI trading is here to stay or if it is the way of the future. We appreciate your time. And now let's return to the video.
Highlighting that these Ethereum treasuries aren't just like an alternative to an ETH ETF. They are playing a really important role in the ecosystem. Well, we've learned a lot. I don't really want to say too much because, as you can imagine, we've probably been one of the largest buyers of ETH, and we've learned a lot. And I would say in the short term, where fair value for Ethereum does not play into what ETH does short term. I mean, look at it. Last week it got to 3,300 on because there are folks who have liquidation levels, or they're doing pair trades, or people think Ethereum's a dead chain, so they're betting on another chain and trying to force levels of liquidation. I think that that's the dynamic near term, but wasn't that Bitcoin at $1,000 in 2017? Like, actually, if people go back to 2017, because I think Ethereum is having its Bitcoin 2017 moment this year, where Wall Street is finally getting behind ETH. You know, Bitcoin was 1,000 in the early part of 2017, and it was until August, and then it went straight up. Well, first, I'm a big fan of Bitcoin. You know, I think Bitcoin is the way, and our work on the fund strat side shows Bitcoin can get to the $1.5 million per coin. So Bitcoin still has a huge story ahead. Yeah, but Bitcoin and Ethereum operate on different parts of how the world is financializing. And that's a principal difference to me, because Ethereum represents the world financializing onto the blockchain, which is not Bitcoin's goal, and the AI world, creating basically a digitally native way to bridge the real world and digital security. So that's, to me, why someone wants to own Ethereum treasuries, because I would buy MicroStrategy if I was looking at this. And by the way, it is a granny shot in the FundStrat ETF. But the reason is that MicroStrategy is growing your Bitcoin holdings every day. So you're going to outperform Bitcoin. Ethereum treasuries are really the only way for a US equity investor to get exposure to Ethereum, unless they're buying ETH directly or an ETH ETF. But if you're an institution and this is one of the biggest themes, I don't think they're going to just say, well, in my fund, my $50 billion large cap fund, Ethereum's the biggest trade, so I'll buy JP Morgan. They might, but they're better off saying, how can I be directly exposed to Ethereum? And they can't really buy an Ethereum ETF because that's not within the parameters of their fund. So I think, to me, the US equity market professional investor looks at Ethereum treasuries as really the only way to get exposure to ETH as a macro trade. And that's why, you've seen like the Cathie Woods make a big investment in Bitmine, and Bill Miller. Today, we announced that he made a major investment last week into Bitmine. So they're institutional investors. They're both of those folks are OGs in crypto, realize this is the best way to have macro exposure to Ethereum. Oh, yeah, David, of course, you're asking a great question, and I have many answers, of which I can't really share most of them, because whatever strategy we pursue, is some of this is very proprietary. But,
MicroStrategy wants to possess roughly 5% of all Bitcoins, or 1 million, and presently owns about 3.2% of the total. If they were to reach this point, they would have a sovereign put, which would make them strategically significant in the Bitcoin ecosystem and make it more difficult for others to make big acquisitions without having an impact on the market. MicroStrategy increased their Bitcoin holdings by making steady purchases over a 5-year period. In contrast, Bitn is purchasing Ethereum at a rate that is almost 12 times quicker than MicroStrategies, while being fully compliant with U.S. laws by conducting business only in the U.S. This supports Wall Street's need for Ethereum staking. That complies with the law, given the limitations of direct Ethereum or ETF purchases. Institutions prefer Ethereum treasuries as the main means of obtaining regulated exposure to Ethereum, since it is anticipated that Ethereum will play a significant role in financializing assets on the blockchain. Let's view further Tom Lee clips.
I would say investors shouldn't oversimplify their thinking around treasuries, because we've become the third largest crypto treasury in the world after Mara blockchain and MicroStrategy. So we own more crypto than MetaPlanet. And so then you realize that companies that are of significant size and liquidity don't simply have to be doing like singular things, so that's probably the difference, because it's a very good question. Okay. I want to start with a numerical thing and then give you the non-numerical. Let's say that someone buys us, and Bitmine is very strict on cost structure. So it's basically with $3 billion of Ethereum, let's say, you're like, okay, you're just an ETF. So let's say you put it at 1 times NAV, okay? But then there's a native yield of 3%. And let's say you pay that out as net income. But let's say you go, oh, well, let's just give it a money market multiple. So 5%, you gross it up. So it's a 20 times multiple of your 3%. Okay. That's adding 0.6 to your NAV because of what you earn on the yield. Does that make sense? Then the third, there's two other components to value. You have to account for velocity, because when we started the ETH strategy on July 8th, there was only $4 of Ethereum held per share. And now when we announced on July 27th, there was $23 of Ethereum held per share. And it's much higher today. We haven't disclosed it, but it's higher. So it's grown by $19 a share in 20 days, roughly. That's velocity. You have to give a velocity, because when you do NAV, the NAV is growing. So you have to give a multiple to that NAV growing. MicroStrategy is getting a 0.7 for adding 16 cents of Bitcoin a day, but we're doing it 12 times faster. So if you did the theoretical math, we should be getting more than, it should be 0.6, which is MicroStrategy's premium, but 12 times faster times 12. Now, I'm not saying that'll be what's priced, but think about it. That's like 6 points of NAV. So that's just velocity. And then there's liquidity, because, after MicroStrategy trades about $3 billion trading a day, we're the second most liquid crypto treasury out there, because we trade 1.6 billion a day. Like Metaplanet, for instance, and I'm a big fan of what Metaplanet's doing, but they're trading like, I don't know, $50 million a day. So we have like a quantum log function of liquidity. So that should be worth a premium too. So I think like Bitmine just should be 1 times plus the yield gives you 0.6, so 1.6. And then how much value do you give for the velocity? And we know MicroStrategy is getting 0.6 for adding 13 cents a day, and we're 12 times faster. And then what's the premium you should pay for liquidity? Because liquidity is how you can issue other instruments at lower cost. Well, that's a function of liquidity, right? So it's liquidity and velocity are like two aspects of the same characteristic. We're able to have a lot of velocity because of our liquidity. I'll give you an example. So today we trade, like as of 2 p.m., we've traded $800 million of dollar traded volume today. And MicroStrategy has traded, 3 billion. So they've gotten a lot. But Ether Machine, which is the third largest holder of Ethereum, traded $7 million today. So we traded 100 times the volume of Ether Machine. And then like BTBT, I believe they're the fourth largest holder. They traded $49 million today. So you can see there's a huge difference in liquidity, which affects your velocity, because everything that you do to get velocity requires your stuff to be super liquid. I think, well, that's probably the synergy of the team, because it's myself, as chairman, but our lead investor in Bitmine from the private investment was Mosaics. And they're a really well-known, very smart macro hedge fund. But that's how we were able to attract folks like Founders Fund, and Stan Druckenmiller was revealed in the registration statement as a holder, and of course the ARCs and the Bill Millers. I mean, you have literally the biggest blue chip names in traditional markets and VC backing Bitmine. That's one element, is that it's obviously the people believe the vision. The second is that I've been a long-time proponent of crypto, and the convergence, and now, we really argued forcefully in 2017 that Wall Street would care about Bitcoin starting in 2017. That was really the year that it became an institutional product, right? And ownership grew from there. this is Ethereum is experiencing its 2017 moment right now. And that's, I think that is logical to the folks that know us. And I think that that's helping support what the Ethereum treasures are all trying to accomplish. Of course, I'm really supportive of like SharpLink and what they're trying to do and Andrew Keys, because we're all doing the same thing. We're trying to stake Ethereum to make it a secure US blockchain. I mean, we're all really working together towards the same goal. In 2017 at Fundstrat, Fundstrat is a macro and thematic firm. So we write about big story arcs. We began to do work that led us to Bitcoin, which was we did two different studies. One was we were studying millennials. And in 2017, millennials were the oldest was mid 20s, okay? But we realized that they were going to be a huge driver of the US economy. So that was 8 years ago. Today, it's accepted that millennials were big. But our work that we did on millennials was actually so eye-catching that we ended up partnering with Snapchat to do several white papers talking about how millennials would be a cohort that you need to monetize. Snapchat was trying to convince advertisers then to do Gen Z and millennial specific advertising. Believe it or not, like Pepsi and these guys thought it was just about Gen X, okay? I know it sounds weird, but that was the story. And but the second thing we discovered was that we noticed Bitcoin, because I was at J. Morgan, was like $100 when I left in 2014, and we talked about it in 2012, and then suddenly it was like 1,000. I was like, whoa, it's $100 billion. I've never seen anything go to $100 billion that didn't have something behind it. So at Fundstrat, we spent several months trying to understand Bitcoin, and I never fully understood it, but I found that it was driven by two explainable things. One is that it was 97% of that move of Bitcoin from 100 to 1,000 was the number of wallets and the activity per wallet. I mean, basically network value effect. And we could simply say, in the next couple of years, if more people use Bitcoin, it's going to go up exponentially again. So we thought it would reach by 2022, 25,000, but it could even go to 100,000 if it got to 5 to 10% of the value of gold.
Tom Lee said he learned about Bitcoin for the first time when it was worth about $100. He was amazed at how quickly it rose to $1,000 by 2017. He said that the main reason for this rise was that more people made wallets and actively used Bitcoin, which shows a strong network effect. They thought Bitcoin would be worth at least $25,000 by 2022, or even $100,000 if it could take a small chunk of gold's value. At first, only regular people could own Bitcoin. No institutions were involved. As a replacement for gold, he said that millennials would own Bitcoin in the same way that baby boomers did. He also said that at first, a lot of people didn't believe in Bitcoin because it was linked to the dark web, which even cost his company customers. But people who held on saw Bitcoin's value rise over 100 times, hitting $120,000. Lee compared the current stage of Ethereum to the early years of Bitcoin. He did this to show how reliable Ethereum is, since it has had no downtime in over a decade, which is something that Wall Street values a lot. He said that Ethereum's on-chain action recently reached all-time highs. This was due to more users and good laws like the Genius Act, which helps smart contract platforms more than Bitcoin. Even though proof of stake and Ethereum quantity have been criticized, Tom Lee thinks Ethereum has even more room to grow. He believes that Ethereum might be worth more than Bitcoin because it's not just about money, but also about key areas, like AI, which is important to the US. Investors also think that Ethereum reserves are a great way to get into crypto in a safe way. What do you think Ethereum's price will be at the end of the year if it keeps going up? Tell us what you think in the space below, like this movie, and share it. Don't forget to like and follow if you liked the video.